Okay, y'all, let's talk about how one event in the Middle East has impacted the entire market with Bryce DeChambeau. No, really, I know the news throws out 100 different headlines at you every day, and it can be really difficult to keep up. But we're gonna look at this entire thing like a domino effect. If you understand the bare bones of each domino, you'll start to understand how it all pieces together. Okay, domino number one, conflict breaks out in the Middle East. Whenever there is conflict in the Middle East, the entire world panics about losing oil supply, because the Middle East is such a big hub for oil. So when oil supply drops, prices go up. That's just basic supply and demand. Okay, domino two. When the price of oil goes up, people start expecting everything else to get more expensive. You feel it when you go to the gas pump first, and then that same feeling ripples everywhere else throughout the economy. Okay, so people are expecting inflation. Okay, domino three, when people are expecting inflation, the Fed pumps the brakes. Their entire job is to keep prices stable by either cutting or raising interest rates. Now, understanding interest rates is a whole other topic. So if inflation is expected to rise, they are not going to cut interest rates anymore like everyone thought they would. Okay, so check in. We have conflict, oil prices are up, everyone's expecting inflation, no more rate cuts. And when rate cuts go away, bond yields rise. Now, a bond yield is just the return you get for lending money to the government. And when rates stay high, because remember, they're not cutting them anymore because of inflation. When rates stay high, that bond return or that yield has to stay high too. Okay, so when yields rise, the dollar strengthens. Money flows into the US chasing those high returns, which pushes the dollar up. And gold, which people usually buy as an inflation hedge, becomes less attractive. So gold goes down like we saw recently. Okay, the last domino. When all of that happens, stock prices come down. Investors aren't willing to pay as much for stocks when rates are staying higher and confidence is kind of meh. So the companies haven't necessarily changed, but the prices that people are willing to pay for them has. Okay, so you have conflict in the Middle East, oil goes up, inflation's expected, rates are not cut, bond yields go up, which strengthens the dollar, and gold drops. And then stock prices come down. Okay, so the next domino to watch is earnings season, which is soon. Earnings season is when companies report their actual profits to the public. And if earnings are strong, meaning good profits, the markets will absorb the information and move on. That's what we like to see. And if they're weak, you just prepare for the next domino. So once you understand the basics of each domino, you start to understand how they all work together. The entire stock market is just a circle of friends influencing each other. If you can understand each piece, you'll have a way better time putting the whole picture together.